Mr. Landau, many of our viewers live overseas and they would be filing in the U.S. How is filing from overseas different than a regular filing?
Well, that's a loaded question because there are many aspects in filing overseas expatriate returns. There's a lot of stringent reporting requirements, FBAR filing, foreign financial asset reporting for their bank accounts and other financial assets that they have overseas, and that's a topic for itself. What I'd like to speak about, what's also very popular, is the child tax credit that many U.S. citizens who live abroad, live overseas, file their U.S. tax returns to get the child tax credit. And there's been many people who are hesitant to file them because they hear of all the different people that were audited and not being able to actually get the child tax credit. And people are confused. Do I always get $1,000 per child, or is it not always $1,000 per child? And the answer is, well, it's not always $1,000 per child. It really depends on many factors. And one of the factors is your wages, your earned income. The credit is 15% of your earned income less the first $3,000. It does not include rental income or other sources of income that you have. And where people got in trouble was, for example, where people included their income from koilo as wages, and then when the IRS audited them, they disallowed that. And once you don't have the income, then you're not entitled to the credit. So I'd say if you actually have the wages and you have the backup to prove it, by all means go ahead, file the return. It's a credit you're entitled to. But if you're not, then you need to be careful.